Welcome to another presentation, and I just want to start the video by thanking people that have been interacting with the videos that I've been doing, and this is a big part of the reason why I'm filming this video tonight, because it's nice to get comments and subscriptions and things like that. But the other reason why I'm obviously making this video tonight is that it's been a really good week for gold investors, especially UK gold investors, because what we saw this week and on Friday is gold actually closed the week very strongly, pretty much at the weekly highs, and we are now in uncharted territory. The pound has never been as weak as it has against gold this week, and by default, gold has never been this high against the pound. So I'm going to talk through in this presentation what is behind this, what's happening in the market to cause this, and a few other little bits. And I'm going to finish off with a prediction as to what I think we are going to see in the market for gold coming up for the rest of the year. So as I mentioned, gold prices have broken out against the pound. So this isn't really a surprise to me, and I'll give you two reasons why. The first one is so gold against the pound went to about £1,580 an ounce at the peak of the lockdown. So when gold prices peaked, when the lockdown was happening, that's where gold prices topped out. There was quite a violent sell-off after it peaked, and then we had the invasion of Ukraine. Gold prices went up again and hit that same peak. There was a sell-off again, but then a couple of months later we hit that again. There was less of a sell-off, and then we hit it again, less of a sell-off. And what I noticed was that gold was like the period between hitting that resistance level was shrinking each time. So it was hitting it quicker, and then there was less of a time lag before it hits it again, and then it was hitting it again, hitting it again. And that told me that what was happening is that the sellers were becoming exhausted at that resistance level, because the violent sell-offs were getting less violent, and they were just becoming little pullbacks. The second reason and the second telling sign that I thought that gold was going to break out up onto the upside was that in 2022 we saw central banks hike interest rates at the highest pace ever. It's never been done that quickly before. And what I noticed was when because I watch the markets quite closely, so when the central banks were actually announcing these rate increases, the gold price would come down a little bit on those days, but give it 2-3 days, gold was back where it was. And I know that there's this whole like markets are forward looking and you buy on rumor, sell on news. So by the time the interest rate is actually announced, gold had already factored it in. I understand that. But the point I'm making is that what I noticed was central banks were raising interest rates and gold had stopped falling. A lot of analysts will probably tell you that higher interest rates are bearish for gold. So all things held equal, if interest rates with central banks go up, that should be bearish for gold. There's been a few times when, especially in the last couple of decades, where interest rates have gone up and gold has rallied at the same time. A prime example, I think it's around 2005, 2006. They were raising interest rates and gold was in a bull market. So it's possible for central banks to raise interest rates and gold to go up. But the key thing that I'm trying to say here is that central banks were raising interest rates at every meeting, and gold had stopped falling. And that told me that we was just waiting. The market was just waiting for confirmation that the Federal Reserve, the Bank of England, the European Central Bank, the main banks were going to pivot. We keep hearing this word pivot. So basically, the gold market was calling their bluff, thinking we can't be far off them reaching peak interest rates and them having to reverse their rate increases. So recently, the catalyst has been, I think that there has been this sort of disbelief amongst gold investors that central banks could continue to raise interest rates, but hold them at the highs. I think a lot of us believe that eventually we would see an unwinding of interest rates, because we've seen it before in the past. Every time the Federal Reserve and other central banks would raise interest rates, they would get to the stage where something would happen in the system, they would have to bring interest rates back down. And each time they'd done it, the interest rate would make a lower peak every time. This is an exception because they hiked rates quickly. And I'm not a banking expert. I looked into some banking annual reports before to make investments in some of the banks. I didn't really understand their operations that well, so I've never invested in banks, and I don't really understand what the hell's going on. As I understand it, this is my interpretation of what's happened. So where US Silicon Valley Bank and other banks had interest rates or central bank interest rates, base rates at zero lower bound, which means practically zero for so long, they were tying up money or capital in long-term treasury bonds and other government gilts and things like that at a very low interest rate. Where the central banks had come along and hiked interest rates quite quickly, it meant that if you are a bank customer, you've got cash on deposit. The bank has invested your money in long-term treasuries for a small yield. What you've realized is that actually I can take this out. I can buy government bonds at 4%. Well, it's a no-brainer. Either leave it in my bank and earn next to nothing, or pull it out and invest it in US treasuries or UK gilts and earn 3 to 5%, whatever it is. So what was happening was the bank customers were taking money out of the bank, and this was causing, because of fractional reserve banking, banks don't actually have to have every single pound or dollar that their customers have put into the bank ready to withdraw. They just need a reserve of capital so that as people withdraw, there's money there. If everyone withdraws at the same time, which is a bank run, they're in trouble. And what was happening was that the rate of people increasing, if the rate of people withdrawing cash from the banks was increasing, and it was making them have to liquidate investments, and these investments had gone down. They bought the bonds when the yield was low and the price was high. The price of the bonds come down, which pushes the yield up by default. So they were making losses, and regulators stepped in, and a couple of banks failed. And now, obviously, we're having a situation where Credit Suisse is potentially going to have to be rescued. So I think that what this has done is gold. I don't believe gold has necessarily gone up because of the banking problems. And I know that a lot of people might not agree with that, but I think that this is part of the banks and Credit Suisse and the US banks. That's part of the issue. And I know that some people will say, well, the Federal Reserve have guaranteed some levels of cash, which means that they're expanded their balance sheet. I get that. But what I think has really pushed gold up and given the gold market confidence to break out and carry on going is the fact that this is now, I think, confirmation that central banks cannot really hike interest rates much more. I think they're done, and a lot of people think they're done. I've been watching a lot of interviews this week. A lot of very gifted and talented market analysts are saying they're done. Maybe they can hike interest rates maybe 25 basis points at the next meeting, but if they're only gonna weeks or a month later reduce interest rates, then what is the point in hiking interest rates another 25%? We potentially could be at peak interest rates now. That is why gold is going up. So just a quick heads up, because I think that a lot of you will benefit from this website, Aurinum. They have a lot of resources, free resources on their website for precious metal investors. They publish every weekend a precious metal market report, which talks through about the gold, silver and platinum prices, the fundamentals behind what's happened that week, comparing them to other commodities and other the G10 currencies. But also what is really good is the map that you see at the moment. This is a live view of every single currency in the world and how it is performing that day against the gold price. So you can see general trends here. You can see when all the countries are lighting up red, you know gold's having a bad day across the board. If it's lighting up green, then you can see gold is doing well. If you see a really bold red or green country, you know something's probably happened in that country to cause their currency to move. So it's great for identifying what's going on in the world. I highly recommend you check out the website. Something that I'm a little bit surprised that no one spoke about this because I speak to a lot of people in the precious metal space online, and everyone has been talking about inflation. They all think that inflation's going to go up. And do you know what? Gold is not the only answer because not everyone can afford to keep buying gold all the time. There's other ways of protecting yourself against inflation, and this is something that I've given advice to my friends and family about. They didn't want to buy gold, so one of the other things that you can do is buy non-perishable goods. So if there's something like deodorant, shampoo, non-perishable goods that you know you're going to need every week, every month, stock up on them because the price is going to go up. So buy it now before it goes up. So that's gold is not the only way of protecting yourself against inflation. And finally, where do I think the gold price is going to go next? Well, there's a lot I could say about this, and one of the first things I want to say is that if you look at how gold has performed over the last decade or two, what we are seeing is like stair steps on the gold price chart. So what effectively I mean by that is that you see gold go up and then it hits a certain level and it starts to go sideways for some time, trading within a range. And then it will break up out of that trading range to the upside. It will level off, almost like going up stairs. And that's what I think that is going to continue to happen. I think that one day there will be a prolonged up move. Whether we're at that stage now, I think remains to be seen, and it will be based on how much of a mess the banks are in, because I think that the central banks have got no choice. If we start to see a repeat of something like 2008, they have no choice but to loosen monetary policy, and the gold price is just going to go ballistic, as is silver as well. So I think that that is a real possibility. There was a time when I haven't always been bullish gold. I was bullish gold for a while, and then I started to question things because I think that sometimes, and we saw this with Bitcoin, is that you get little niche communities in investment, and everyone is bullish, and anyone that comes in that's bearish or has an opposing view is sort of attacked. And so what you have to be a little bit careful of, especially in like Bitcoin and precious metals, is that when you're talking with fellow investors, that you don't all become like this herd where everyone's bullish and no one can have an opinion against it. And I started to question a few things. And the thing that I couldn't get my head around for a while was interest rates were being held at 0 or 0.1 in the UK. I think it was 0.5 in the US. And everyone knew that interest rates would go up. And I was like, well, how can the gold price sustain its current level? And obviously it was much lower then. How can it sustain that level and not fall as they raise interest rates? And I just couldn't get my head around it. And then I done more research, and obviously I found out that there has been some times in the past where interest rates have gone up with the gold price. But more importantly, the thing that I just think is always going to ensure that the gold price is going to go up is government deficits. All the time in the West that we have these governments that are operating deficits, they're spending more money than they get every year. I just think, how can gold go down? And this is why I think that long term, over my lifetime, gold will be much higher. And I think the biggest risk to the gold price is that we have a government party of some description in the UK that says, right, enough is enough. We've been living beyond our means. We are going to cut spending. We are going to make sure spending is maybe only 80% of GDP. We're going to use that other 20% paying off debt and basically building assets for the taxpayer. And we're going to cut NHS. We're going to cut the school funding. And look, it's never going to happen because who would vote for a party like that? Politicians bribe us at every election. You'll see at every election there'll be a party come out and say, we will write off student debt. They're bribing students. They're saying, look, you vote for us and we will write off your debt. It's a bribe. That's the way I see it. So all students think, well, I don't really care about politics, but I want my student loans paid off. Yeah, of course, I want them written off. I'll vote for that party. And then you'll get someone that says, oh, if we get elected, all children eat for free in schools. Well, if you're a parent and you don't really care about politics, but one of these parties are saying your kids eat for free, you vote for them, don't you? And it's bribery. And this is how we get this shower of shit in government, because they bribe certain groups to say, vote for me and this is what you'll get. But this is our money. This is our money. This is our tax money. And we're very, I think we're heading towards some sort of socialism where the government just gets bigger and bigger and bigger. And I don't like the idea of that. But anyway, I'm digressing. So yeah, to I just want to say I think that at the moment, gold is at record highs. Normally, any investment that hits a record high, I stay away from. But with gold, this is very different because we are looking at gold against the pound, and I just can't be bullish for the pound. I just can't. And the dollar, the same thing for the dollar, the euro, because we just have these governments in that are only interested in the next 4 or 5 years, their government term. They don't care about what long-term damage they're doing as long as they get re-elected. And this is the problem. And this is one of the advantages that China has, because China doesn't have elections every 4 years. They can think long-term, and this is a disadvantage in the West. Yeah, we have these democracies, which is great, but I just think that the way that it's set up by design, it just means that the politicians that give us the best time in the next 4 years are going to be the ones that remain in power. And for the long term, if you're going to carry on spending more than what you earn, something's got to give, and that thing is the currency. One final thing I want to say is that I think there's a lot of investors out there that are expecting central banks to lower interest rates. I spoke about this pivot. I don't know where I stand with this, because I think at some stage, two things are going to happen. Number one, central banks and governments are going to capitulate on their 2% inflation target. I think that we will see a much higher inflation target, maybe 4 or 5%. That will become the norm, where they say, oh, we had a good year, inflation was only 5%. I think that is coming in the next couple of years potentially. And the other thing is that this is more of a longer term forecast for me, but we might be getting there quicker, especially with things like the lockdowns. I think the lockdowns were a terrible policy mistake. That was economic suicide. I think when you look at the US, the UK, and some of the European countries, they've been in economic decline for a while, and I think that really expedited that decline. The fact that we shut down our economy voluntarily, it was a terrible mistake, and we're poorer for it. That's what I believe. But the final thing that I was getting to is that I believe that we will see a higher interest rate, being the low base. So I don't believe we'll go back down to 0% because our currencies are weaker. If you look at some of the poor countries in the world, they've got high interest rates. Why do you think that is? Because they have to attract foreign capital, for one thing, and because their economy is not that strong, they have to offer a higher return to attract that foreign capital. But the other thing is as well, their currency is weak. And when your currency is weak, you need to raise interest rates to get more capital in, foreign flows into your own currency to try and support the value of it. We've been quite spoiled in the West. The pound, the dollar, the euro has been a strong currency. It's been one of the strongest currencies in the world. I think that will change. I think that the Asian and Eastern currencies will become much stronger. Our currencies will be comparatively weaker, and central banks will need to have a higher interest rate. That doesn't mean that gold is going to go down, because what really impacts gold is the real interest rate. So that's inflation adjusted. It's inflation compared to the interest rate. So the interest rate could be 5%, but if inflation is 10%, that's going to be bullish gold. So anyway, I just want to say that I think that I will do more of these forecast videos going forward, because I have a lot of thoughts. But I just want to thank everyone again that support this channel through liking, commenting and subscribing. And I look forward to seeing you on the next video. Thanks for your time.